Hello folks, I'm Melly Little and this is your daily TA wrap. We take a look at these markets and we do it each time using a neoclassical perspective, asking ourselves what happened today and what does it tell us about tomorrow. You know, I do this show 4 times a week. I do it Monday through Thursday, live at 9 o'clock Eastern Time here from the base of a blizzarded, snowy Rocky Mountains. I do the show on Sunday as well. I invite you to join me then. You can always pick up these shows here on TA Today. You just come over to the TA TV, go to all channels, or go to the live streaming actually, and you can pop in there. It's also on YouTube. You can subscribe to the channel. You can pick it up on YouTube, which is a nice, easy way to view it whenever you want to as well. You can view it on mobile devices. It's more and more mobile device viewing the site. We've redone it to accommodate that. Lastly, I would invite you to tell other people about us, right? There is a way for you to earn money for yourself for services here, and if you want to do that, I would invite you to do that. As far as today and as far as these markets, last night we talked about the need for this market to get out of this area. You know, push out of here, push up, and that's what we got, and that's what we needed. If we look at the performance here, you know, it was pretty clear cut, straight up today. They came off the lows, didn't look back, kind of had a meandering at the end of the day, pushed up, and then they actually sold off after the bell with the earnings off of a Google, off of Amazon. But then Google surprised with the stock split, doing those C shares that they talked about before, and Google shot up as a result of it, even though they had disappointing earnings. Amazon had horrible earnings again. Amazon almost always seems to have horrible earnings, but Amazon never seems to matter. They just always seem to go up. Amazon was down big, and they turned around to some degree at the end. We'll look at both of them here in a second. The Dow Jones up 109.15. 848.5. S&P's tacked on almost 20, 1794. Composite up 71 3/4. 4123 was the close. The NDX 64. What is that? 64 3/4. 3532. Big day up, almost 2%. It was up over 2% at one point. The Russell tacked on 1.5%, 17 points, 11,040. Or actually 11,039 1/3. Gold was down about $20 today. Oil was down. The dollar shot up what is that, about 65.65%. We had bonds down today, but not that much. They came back at the end of the day. Nat Gas, man, Nat Gas was up like 10% yesterday, down 10% today. That's a crazy one. All in all, stocks needed to get out of the rut, get off this bottom. And that's what they did, and that's what they had to do. And when you look at it, you know, that was exactly what was needed. We talked yesterday. They needed to get out of this area and start moving up. They started moving up today. SPX up higher. Unfortunately, we don't have the ending volume numbers yet, so we'll pop over to the ETFs for those. But you're going to see that those numbers were pretty small compared to what we've been seeing. And suggest that this is a dead cat bounce. Now, we have seen dead cat after dead cat after dead cat over the last year and a half. This market feels like it's different this time, and I suspect it actually is, but until we see a failure of a bounce, it's hard to believe it. And so when I look, and we talked about this previously, when I look at this, and I look at the ABCD structure potential, right? If it were to go up no more and to take off, that would be the ABCD structure to the downside, right? You'd break swing point lows, all that business. Well, what if it doesn't do that? What if it actually goes the other way? In other words, we come down, grab my pointer, we come down here, and then we get up here somewhere, come down again, and instead of actually going all the way down, we stop and we simply go back the other way, ABCD structure to the top side. That's a possibility. I mean, that is what we've seen over and over again. As a matter of fact, what we've seen over and over again is even better than that. And that is that we come down, right? We see a nice big spike down. We see a nice big rise up. We don't get hardly any pullback, and then we just go right back up to the highs. And I've seen that so many times, it's like ad nauseum at this point. What's it going to be? Well, we won't know that for sure, and we'll never know for sure, right? But we won't have enough clues until we get a little bit farther out, and we're actually able to see what kind of volumes we're going to get, and are we going to get failures. And we're actually starting to see some of that already on the stronger. This is a weak one. Dow Jones is a weak one. Let's pop over and look at the SPY, and we can see it there. So here's the SPY. You can see the volumes. There's nothing there. We got a bounce up here, no volume. Come down, big volume. Bounce back up, no volume. Will we bounce up more? Yeah, we can. I mean, it certainly the place that you should be considering as a target is the retest regen zone, which is way up here off of this bar and actually extends that far potentially, right? It could get all the way to here and still be a failure. Now, if it gets up to that level, we're not going to have failures over in the other markets. And let's pop over and look at the Qs. For example, if the Qs, if the SPY, the SPX were to move up that high, the Qs are going to be over the highs. You know, unless something drastic happens and we get a huge divergence between the two indexes. Because these are much stronger than the SPX. So on the way up, you have to watch the strong ones to see how they perform and what they do. And if you look at the Qs today, the first thing you'll notice is the volumes was there, right? They push up into, and I'm going to use this little icon, they push right up into that anchored resistance. Certainly they had resistance here and here, but there is resistance there. It will show up tomorrow on the charts since we only show three. There was three here, one there, and another one here. The fourth one is up there. That one will show up tomorrow. As we're pushing into it, we're pushing almost, actually just a little bit more volume than we did on those two bars in that little intersection. That suggests that we're going to go right back in there and try to do it again. And we're going to try to get over it. And that's probably going to happen tomorrow. And given the way Google traded after hours, it looks like it will happen tomorrow. Here's Google. Google trades up pretty big today, volume expanding. After hours, they actually traded flat to down most of the after hours until the conference call when it was mentioned that they were going to split the stock. They were going to create those non-voting C shares. So one of the reasons they haven't split so far is because they didn't want to dilute their voting shares for those CEOs that are running the company, right? They don't want to lose power of the company. By doing it this way, they can split, they can bring the price down, they can invite in more people to buy at cheaper prices, and they don't dilute their voting shares. And for them, that was a big deal. They won the court battle to do that. Once they announced that, earnings, once they announced that, price shot up. Google finished over these highs at the close. That's 1167. It was trading at 1180 at the after hours close. So Google looks to break out. That's going to be an ABCD structure on the upside on a weekly. Let's see what that target looks like. I believe, yeah. So the existing target out here was about 1240 if I remember right. So 1240 still on the table, and now you're going to have another ABCD structure in between. Amazon. Amazon was the other big dog tonight. Now this one is actually taken away, but I saw at the very end of the night, Amazon traded back up to almost break even for where it was at the beginning of the day. So it was about 390. Actually, what is that close? 383. So Amazon was trading at about 380. So it was holding this area at the end of the night. It had traded as low as 360 something. It was way back into this bar after hours, and then it ended up closing up here. Amazon's going to be an interesting one tomorrow. Now, huge volume came in today, right? Big wide price spread bar, huge volume comes in, and a lot of that volume, I looked intraday, came in right at the close. Looked like somebody was gaming, right, the earnings, and it looks like they lost their bet, because this thing is going to be a loss on that bet itself. You got an area up here, you got an area down here. I would expect Amazon is going to fail. Now, the weird thing about Amazon is they always miss their earnings, it seems, and yet they get bought time after time. I mean, they've probably missed 10 out of 12 in the last 3 years. Yet they go up in price. I mean, if you pull this back and look at it, it doesn't matter. They just go up. If I'm going to put it on a monthly, right? This is like a price rise, and this is multiple years. So they've been missing earnings all along here, right? This entire period of time, Yet they go up every time. They sell off and they go straight back up. So I'll be curious to see if they do it. Amazon, all these stocks, less and less volume as we're going to higher and higher highs. It doesn't matter except for at the not swing points, but it doesn't matter until you actually get, a situation to where you're measuring against something, right? When you measure against something, that's when it matters. Otherwise, to me, it doesn't matter that it goes down over time. It just matters when you measure up against something. So Amazon probably going to take away tomorrow, but it's not as big a weighting as Google. Google's going to help it out. But if you come over to the last guy, and that's Apple, remember Apple disappointed on Friday. This is the monthly on Apple. It failed right at resistance on the monthly. Pull it up to the weekly. Apple is set to break on a weekly. You got a swing point low right here. This bar. Apple's underneath it. Unless they get a heck of a rally tomorrow, Apple's going to break on that time frame. It's also going to break on the daily time frame, and it's breaking multiples, 1, 2, 3 of them on the daily. That, if it can't get back over this area, that's the weekly. If it can't get back over the weekly, which is this price point, 512.38, we closed under 5, I believe. Yeah, 499.78. So it's got to rally more than 12, 13 bucks tomorrow. If it can't do that, it's going to break on 2 time frames. That usually says it's going to continue and extend down. All right, looks like I got my quotes finally in terms of volume. So let's see what they are. Here's the S&P, and slightly more volume than the last day up, but still less volume than the days down. But right at this point, it doesn't matter. Let's see what the Russell did, because that's the one that the Russell actually failed on the retest regen. And I didn't get the Russell volume yet. Let's look at the Russell IWM and try to game it from there. Oh yeah. So what do we got here? We got it's at least on the IWM it failed. So it failed in terms that it couldn't get into it. So that's a retest regenerate that's succeeding to the downside. That's the way you read this guy, right? And what that means is that we're coming down, right? We're getting a bounce. This is going to try to regenerate lower. That retest regen is this big bar, and that's the bottom of it. Now it's within 6 bars, so it may try some more. It doesn't have to fail on the first attempt, but the first attempt is a failure. Let's see what if we have volumes on these others. The NDX, because the NDX actually went into, so here's the NDX. The NDX went into that area, and here on the index itself it has less volume. That also looks like a failure. Now it hit it with pretty good volume. We saw it hit it on the Qs with good volume. It will probably try it again. It's good enough volume. You're doing 21.6, 23, 24. Yeah, it's a toss-up. It may try to get back up in there tomorrow, but that at that resistance zone looks like a failure so far. And let's go over to the broad NASDAQ and see what that one looks like. And volume is less there too, and it's the same situation. So both of those look to have failed. Now let's see what the Dow has in terms of volume while we're here. And I'll see if I can get that quote on the Russell before we're done. And so the Dow just gets into the bottom here and doesn't have it. I mean, Dow can't even get back into this bar. That's how weak it is. That fell's trying to get back into the bar. Okay, so not mixed at best. Maybe that's the way we put it. Although the good part is that you did get the bounce, right? If you're bullish, you got a bounce. You needed a bounce. Now the question is going to be, are those failures going to be really failures or not? If they are, then that's going to be an issue, right? Because then you're going to get ABCDs to the downside. Maybe I got the Russell volume now. Yeah, I did finally. So here it is. Let's take a look at it. And that also is a failure. Wait. Maybe not. 359, 354. That's about as tight as you can get. Probably go right back in there and try it again. So it looks to me like the strongest ones, which is the ones you want to watch first, the strongest ones look to be failing on the first attempt to get back into the swing point lows, which means it's a retest, regenerate to the downside so far. All right, I looked over at the sectors. Actually, before we go to the sectors, I want to show you a few of the world markets, because the world markets look worse than us. If I go over to Europe and I look here at the CAC, which is the French index, right? There's nothing here. I mean, they got this huge move off the Fed day yesterday. Fed day yesterday, yes. I'm trying to remember if that was yesterday. It was. Big spike up and down, nothing there. They're just, it's an inside day today, so it doesn't tell you anything, but, this is a struggle. You come down big volume, you can't get much of a bounce. If you look at the German DAX, it's the same thing. Looks as bad or worse. And this is where we're seeing quote-unquote good economic numbers. If I look at the FTSE, where we're talking about the best housing numbers since 5 years ago, and we're talking about GDP the best it's been, doesn't look so good to me. Now, mind you, I one of my friends over in Australia, sent me a great article about the FTSE not being representative of Great Britain because it has too many mining stocks in it. But still, I mean, the mining stocks have actually been doing good, so that doesn't explain this. These other markets are struggling. If we look at Japan, it's a struggle there. They were down 5% last night. At one point, closed down 3%. You could see them hitting the bottoms, hitting it with volume, under multiple swing point lows. These look like they're going to try to regenerate lower. If I look at Hong Kong, it's the same thing. Hong Kong made new lows, right? These are not healthy. These are not healthy looking charts. Hong Kong extends down. Now Hong Kong can bounce back up into this area, and should, right? But this thing broke multiple swing points on multiple time frames. That's not going to go back up there and probably just go straight back up. Matter of fact, if it goes back up there, you ought to be thinking about shorting it, because that is going to be a hard area to get back over, those swing points. Because you broke here, you broke on the weekly as well. So overseas looks about the same as here, and that is that it actually looks worse. It looks challenging, right? If we go to the sectors and take a quick look at the sectors, you got most of the sectors didn't say a thing today because most of them are so far down it doesn't matter. The only ones that really showed us anything, there was three. One was the XLE. XLE comes in, starts doing a retest regen off this swing point low, and what does it do? It regenerates lower. That's a failure. And I did have enough volume, so it looks like it will come in there and try again, but it doesn't have nearly the volume it needs. It doesn't appear, I should say, to have nearly the volume it needs to get over this area. This looks like it's trying to regenerate lower. If I look at the only other one that did anything, and that was the XLK, which is going to be in the spotlight tomorrow, given Google. This one should try to trade up tomorrow. Today, it went into that swing point low, had the volume though, 6.4. It went into it and failed. It had 6.4, 8.3. So this one also is trying to regenerate lower, but it hit with more volume, so it should try again, and that also looks like what should happen given the after hours numbers. The only other one out here was the XLU. Now the XLU is tied to dividends, right? People seeking safety, seeking a place to put their money. This thing breaks out over the highs. 2, 3, 4, 5, 6. Yeah, breaks over the highs. So you get over the swing point. So it's going to change trend tomorrow. It's going to become bullish on this time frame. On the weekly, it's not quite as bullish. It's got to get over these highs up here to to turn back even sideways. But this is heading higher, right? And it's heading higher when the rest of the market's heading down. That's usually not what you want to see. You want to see the utilities kind of weak or going sideways while the rest of the market's heading up. So this still is upside down in terms of what it's telling you. Over in the ox markets, the main things over here are the currencies, the dollar, and the bonds. So let's start with the dollar. With the Fed tapering, that should put strength into the dollar. Yesterday we didn't see it. Today it was there, and it was there big volume, big spike up. Dollar's going after these swing point highs. If you look at it on the weekly, right, the dollar is going after multiple swing point highs as well because it's got this high here. That's 21.96, right? And it's pushing some decent volume into it. It's not going to get there this week. 21.96 is this price point over here. And so of course you'd have to get over these. There's one here, there's one there, so it would be multiple swing points. You could get some juice, right? You could get some juice off of this, right? You got this one, you have this one over here, right? So that would be two of them, which would give you enough juice to get up and test this one. Dollar, big volume, looks to me like it's going to try to do it. That means you're going to see weakness in most other currencies that the dollar trades against, that basket, which is Europe, the euro. Let's see if the euro looks the same. It's also the British pound, the Canadian dollar. So FXE, we should have seen a push higher in this, lower in this, and we did. No volume. It's going to go after its lows though. The Canadian dollar has been under a lot of pressure, still is. I don't think today would have helped it any. And it didn't, although it did finally do a test of a low, so it may get a little bounce tomorrow. The other one's the British pound and the yen. So the pound comes down. It looks like it was across the board today. Pretty much all of them got driven lower. The yen lower, that should help the market tonight. And let's see what the Australian dollar did. That's the other one. And I believe it was actually up today. Yeah, up slightly. Australian dollar is doing a retest regen off the lows it broke. Didn't get much of a push here, even though it broke multiples. Yeah. All right, so currency looks like the dollar is going to push higher. It's going to put more pressure on others. That should put pressure on gold, which is what happened today. Gold presses lower, gaps down, just hangs there, doesn't go anywhere. But the volume didn't expand that much when I looked at it. 8.7. It's coming back into some big bars. So you got 10 on this one, you got 16 on that one. This gap up bar was 11. That actually doesn't look bad. You just set a high, you gap down, you set a high with volume. This to me looks like it's going to turn and try to head back up despite the dollar, which is pretty amazing actually. We could push lower. I mean, gold has been bearish for a long time. So I don't think once you get too excited, the real key area on gold would be down here, right? It'd be this little zone in this area, which you'll redraw tomorrow. You'll have one there. Right, you got this is a kind of a overlap off of this bar. So you have multiple areas down here. This whole area, you know, if gold were to trade under that, that would be bad. Anything above that is probably good, and right now it's you know, holding its own. Looks like it will trade a little bit lower first though, but it still looks good. Let's see if silver looks the same. Poor man's gold. And yeah, actually looks worse. Well, in a way, this is good. So silver's been coming down, gold hasn't. Which is interesting because silver is more industrial than gold. Economy, you know, the economic numbers haven't looked that great. So this is a reflection of that, I think. Looks to me like it's going to test that big volume bottom it laid out there, which would be a good thing. Especially if you know, tested on less volume and gold is divergent, which it is. That would be a good scene. All right, let's see bonds real quick, and then let me go to your questions. Okay, so bonds pulled back. It's an inside day. Yeah, that doesn't tell us anything yet. So 107.09 was that high. It got to 11. I think you'll see bonds try to come here one more time at least into this bar. If they can get into this bar, they can make it to the bottom of the bar, which would get them close enough to the retest regen to potentially do one, right? And I would think that they would regenerate higher given what looks to be a market that is going to try to trade lower before it's over with. All right, what kind of questions we got here? Z, I haven't seen you in a while. What do you think of some Momo stocks? UA, CMG, FB, Netflix. Well, I think that they're okay as long as you're in and out of them. I don't think I'd stick around in these guys. Wow, Under Armour, big. Talk about Momo, that's a big one, huh? Let's go to weeklies on this so we can see what they look like. Yeah, that's a big one, and I'm assuming this all came off of earnings. So yeah, you know, something like this, you gotta find a spot to step into it. You know, one thing I should, you know, let me try to clarify, you know, because I just said I think we're going to go lower before this is over with. Even if we go lower, unless we really start changing the long-term time frame, which is going to take a lot lower to do that. Well, actually, I should take that back. There's a caveat in that on the monthly, if we hold these prices tomorrow, on the monthly, and I'll pull it up and show you what I'm talking about as I'm talking about it. On the monthly here, on the SPX, and it's true on most of the indexes and a lot of the sectors, this month's bar, last month, December bar, is going to print as a swing point low, right? Because we haven't gone under it. The low so far is 1770.45. The low there was 1767.99. So 2 points away. We haven't gone under it. That's a swing point low. You got 6 bars. That's going to become one at the end of the month, which is tomorrow. So when I talk about, you know, unless you change the long-term time frames, it isn't going to take much to change them now, which is actually bullish. Why is that? Because that's going to reset. It's going to reset those long-term MTTFs. And it's going to do it with almost no price push to the downside. Now, what's really interesting, if you got a serious price push and you close under 1560, you'd actually go bearish on the long term. I was looking at this last night and scratching my head and thinking about it. As long as the correction, whatever it may be, isn't deep, this is pretty bullish for this to happen this way. Right? In other words, if we don't get a deep correction, this is a pretty bullish setup on the monthlies across all the indexes almost. I think it was on 4 of the 5, and across most of the major sectors. So, you know, I honestly, in my research and in watching these markets now for about 6 years, I haven't seen this happen before. And so, as I say, I was scratching my head last night thinking about this and trying to, you know, consider the ramifications of it. And I can't come up with anything except for that being bullish as long as the declines are reasonable. Because it resets all those extended MTTFs. So it's just an interesting setup that I've not witnessed before, and that to me appears to be a bullish setup. So longer term, you know, going back to the original thought that brought me here, is when you ask me about these Momo stocks and I suggest that we might go lower before we go higher, that doesn't mean you abandon these things. What it means to me is you wait for retraces to buy them. And so going back to the stock Under Armour, you know, I would look for a place to get in this thing. You know, I wouldn't buy it right now, but I certainly would look at it. I mean, there's some others they're not Momo, but there's some others like this one I mentioned in a video. NVR did the same thing on earnings, pops up, you know, nice big spikes. These stocks, you don't just ignore them, you keep watching them, right? Because they're going to give you entries, and they'll give you decent entries if the general market pulls back, because when the general market pulls back, it will pull these stocks back with it. So my you know, going back to your question, my thought is you want to be, and CMG reported tonight, they're going to break the highs tonight. So CMG is another one. What else you got up here? Netflix, you know, Facebook broke out yesterday on its earnings. So Facebook, same story. I don't really like Facebook that much, but hey, you know, it'll come back, probably do a retest, regen, it's a buy. So yeah, let the general market, assuming the general market will come back, and I believe that's an odds-on bet right now, these guys will be pulled down and you can get decent entries in some strong stocks on general market weakness, and the fact that the monthlies are going to reset and we could regenerate for another, you know, 3-4 years again, right? That's how long this has been going on. So interesting setup. So Z, that's what I think. Dan, what do you think about GLW? Is this another Momo, Dan? Oh no, Momo the other way. Okay, so you got a big sell-off probably on earnings. Let's see what the weekly looks like. Yeah, actually, you know, it comes in there. You got big volume there. It's not the end of the world for these guys, right? You probably want to try to catch it on the next retest. So, you know, when you get a big price bar like this to the downside, it's probably going to come back there and test it again. Sometimes they'll come immediately, which just tells you they're weaker, or sometimes they'll get the bounce first, which is what this one's doing, which tells you it's stronger. It'll come back up here, it'll fell here, and it eventually drift back down to the bottom again. So you can envision that, you know, given that this one's telling you it's stronger, you know, this is going to try to climb up here and test that and fail, work its way back down to the bottom and fell there, and that's the one you want to buy down here. So you just have to watch this. Sometimes it takes 4, 5, 6 weeks for it to even happen. But if you're patient enough, you can get a good entry on it, and it's probably worth buying. It's just that right now you got too much damage short term. You gotta let it go. You gotta let it correct in terms of time now, right? And then buy it. All right, I'm way over. I'm gonna leave it at that. Tomorrow I'm off. The markets, no big news tomorrow. You're gonna have the earnings plays off of Facebook tonight. Now Google, Amazon pulling the other way. Can Google take this market higher? What will Apple do? I got a article coming out on Apple and Icon tomorrow, so look for that in Market Watch, and we'll see what this market does. It's a good chance we're going to bounce some more, right? There's a good possibility we're going to get some more bounce out of this. We may come down first, then get another bounce, but it looks to me like, you know, there's going to be a little bit more bounce. But longer term, and when I'm saying longer term, I'll talk about the next few weeks. I still think we take out those lows before we take out the highs. That would be my odds-on bet right now. Have a great night, folks. Thanks for joining me. Take care of yourself, and until next time, I'm LA. This is and was your daily TA wrap. Have yourself a great night. Good night, folks.